Hey everyone, Ursi here. Yesterday, the US economy reported its worst economic contraction since the financial crisis. GDP growth for the first quarter of 2020 just came in at negative 4.8%, and somehow the numbers in the stock market are just ridiculous. The Dow Jones closed 530 points higher on Wednesday and is now only down about 13% year to date, which is insane given that the economy has essentially gone down the drain for Q1. All this while Jerome Powell and our good old friends at the Federal Reserve have been smashing the money printing button just like you should smash the like button to show my channel some support, just like the Fed is trying to support the economy. So because of all this, our national debt has ballooned to over $7 trillion. And yesterday, Jerome Powell came out and said that more stimulus is needed for there to be a relevant recovery in the economy. So, is this high debt going to crush our economy? Is the stock market crash coming soon? And if not, how long for this to manifest? Now remember, before we answer that question, the nationwide lockdown only went into effect in March, which means that the quarter one results were sort of carried by strong economic activity in January and February. Had we been on lockdown for those 2 months as well, the GDP numbers would have certainly come in a lot weaker than just negative 4.8%. And this worries me because, well, we've been on lockdown all of April. And yes, we are hearing news about the economy slowly starting back up in certain states and certain areas. But this isn't going to happen right away. And for the most part, I think we'll be on lockdown for the majority of the month of May. Which brings me to my next point. It is very likely that quarter two GDP numbers come in a lot weaker than Q1. And having 2 consecutive quarters of negative GDP growth is basically the definition of being in a recession. Seriously, look it up. So it's safe to say that the 2020 economic recession is officially here. But the market is ignoring all of this at a time when the unemployment rate is set to reach levels of the Great Depression. Pending home sales are down 21%. Businesses are bleeding money with no customers entering their doors. The average American consumer, who is the driver of our economy, is bleeding money. Some are still struggling to get stimulus checks. Some people are still struggling to get unemployment benefits. And we can barely get the Small Business Administration to provide support. So, how does all this make us feel? When we look at the stock market and see how everything is up about 10 to 20%. Some stocks are up 30%, even though this company, who is still bleeding money, has recovered a lot of the losses that their stock price experienced when the market went down 30% in late February and March. How does this make sense when even the biggest investing minds are flashing red flags? Are we about to walk into the biggest bull trap ever? Is the market about to plummet even worse? Let's talk about what it would take for the market to crash again. First, I'm going to talk about real estate and the housing market, which in and of itself is a huge market. Then we will talk about the stock market, and both of these are going to give us an idea as to when we will know and what to look for in terms of the entire economy crashing. The reason I want to focus on these two things is because when crashes happen in the market, that affects real estate. And when crashes happen in real estate, that affects the stock market, just as we saw during the financial crisis in 08-09. Before we dive into this, I made a video explaining why I think the market will have another big dip, and I make comparisons to the last recession and how that one lasted 1.5 to 2 years, and during that time there were a lot of up and down dips in the stock market, which is common during the recessions. So check that out if you want some perspective and if you think you missed out on buying stocks a month ago when the market dropped 30%. Now let's dive in. So real estate first. As I mentioned, pending real estate sales, which is the amount of people that agreed to buy the house and went under contract to buy it, are now pulling out of that deal, and this is down 21% while it was estimated to be only down 13%. So this is substantially worse than it was expected. Somehow though, this has barely affected real estate prices, even though multifamily real estate is hurting as rents are declining, which will eventually lead to those properties being worth less, since multifamily is usually valued using cap rates and gross rent multipliers. Another segment is commercial real estate and flips. So if you're a real estate investor, I'd stay away for the time being. Real estate prices are not down just yet, but don't count on that lasting long because we have not seen the most important indicator decline yet: median home sale prices. And basic supply and demand economics tells us that when demand is low, prices tend to fall. And what has been happening lately? People aren't trying to buy houses right now. Those that were on contract to buy a house are pulling out of the deal. So I think this low demand will eventually cause real estate prices to fall. And I think that could be one of the reasons we see a crash in the real estate market. And if you recall, real estate was a big reason for the financial crisis recession we experienced in 08-09. I mean, real estate is huge. It's about 13% of total GDP, and it employs about 2 million people. Now let's talk about the stock market. What is it going to take to see another crash in the stock market? Well, there are two things I'm looking at here, because I think one of the biggest reasons why the market is staying up is because from all this positive news for treatments, and Gilead Science coming out yesterday with high expectations that their new treatments is showing some promising signs. Also, some positive news has been surfacing about a potential vaccine coming out as early as September of this year from organizations like Oxford University and companies like Johnson & Johnson. So, number one, for the market to crash again, we're going to have to see treatment and vaccine trials fail. Number two, the market will certainly crash if the opening of the economy fails. There are a lot of efforts right now to open things back up. We're starting to see states like Georgia open its stores again, and other states loosening restrictions on lockdowns, all while people in the US are still passing away by the thousands. So if these efforts end up failing and we end up causing a second wave, or the flu season comes back next fall and this ends up compounding the devastation and we go back into another lockdown, then I think there's a really good chance that we will see another market crash. So how do we approach investing during this time? Well, here are my thoughts. For me, at least, in my opinion, I'm staying away from the market right now. I saw this coming in late February and freed up a lot of cash. And over the course of when the market was down huge, I deployed about 30% of that cash and kept buying on the substantially red days. I deployed only 30% because I thought things were going to get a lot worse, and that would give me the opportunity to buy lower as the market kept tanking. But now, I'm a little frustrated, as I'm sure a lot of other investors are, and I keep kicking myself and I keep thinking I should have bought more. I missed out on some big gains, but I can't buy with the market this high, and our economy just isn't in a good place with all this uncertainty out there. Now, I can't predict the future, but when you look at all the evidence and when some of the big investing minds are warning about huge economic implications, I can't help but think that we will see another big dip in the market eventually, which will give us more opportunities to buy our favorite stocks at cheaper prices. And that's what I'm doing right now. I'm staying fearful for the time being, but when the market starts to panic and goes back down again, I'll be greedy and start buying again. Thank you for watching this video. Please let me know in the comments section what you think about this recent update. And if you enjoyed the content, please subscribe to my channel and hit the like button. Peace.